In this video I'm going to break down whether Bitcoin is a good store of value. This is part 4 of the video series where I'm attempting to explain what Bitcoin is by using the 11 characteristics that make sound money. In the first 3 videos I've discussed the first 6 characteristics of sound money, and those were the first one, divisibility, the second one, durability, the third one, transportability, the fourth one, non-counterfeitability, the fifth one, medium of exchange, and the sixth one, unit of account. If you haven't watched the first 3 videos, please do so. There are links in the first 3 videos in the description below. So whether Bitcoin is a good store of value is what we will discuss in this video. My name is Robin and I recently started learning about Bitcoin. And I'm sharing my findings with you in these Bitcoin video series, so make sure to subscribe as I'm publishing 2 new videos per week. So without further ado, let's begin with the 7th of the 11 characteristics of money, which is a store of value. So let's begin by explaining the definition. A store of value is an asset that over time should either be worth the same or more. So real estate is a good example of a store of value. Most often real estate is worth more a few years later. Gold and other metals are also used as a store of value. To use a currency as a store of value, it needs to be reasonably stable. The challenge of using the US dollar as a store of value is that the Federal Reserve aims for 2% inflation per year on average, meaning its value decreases by 2% every year. And as said in the beginning, a store of value is an asset that over time should either be worth the same or more. And the US dollar lost 96% of its value since 1913. $100 in 1913 was only worth $2.50 in 2018. In other words, storing all your value in US dollars is not a wise decision. So does fruit also make a good store of value? No, it doesn't, because an apple or a banana isn't durable. Suppose you keep an apple or a banana in your safe for a couple of years. In that case, it probably isn't as tasty as it was, and therefore it isn't valuable any longer. What's also an essential element of maintaining its value over a long period is scarcity. Sugar, honey, pasta or salt are products that look and taste the same if you hold them for more extended periods of time, meaning these products are durable. But the reason why these products aren't a good store of value is that they aren't scarce. These products are easily created and the supply outweighs the demand. Another thing that illustrates fiat currencies such as the US dollar, for instance, isn't a good store of value is because governments can easily create more of it. The so-called money printing. If the demand for gold suddenly goes up, there isn't a way to produce more gold fast. It's not that there is a gold press or something. Mining gold is a time-consuming job that therefore costs lots of money. So what's the deal with Bitcoin? Well, many Bitcoin supporters believe Bitcoin's strong suit is its store of value, since it increased in value tremendously if you look at its 5-year growth. 5 years ago, in December 2015, 1 Bitcoin was worth around $400 US. 5 years later, as of this moment, 1 Bitcoin is worth a little over $19,000. That's an increase of more than 4,000%. So what makes Bitcoin a good store of value? Well, Bitcoin has a scarcity element built inside, since there will never be more than 21 million Bitcoin. Furthermore, the only way to produce new Bitcoin is by mining Bitcoin, which is explained in the previous 2 videos. In short, mining Bitcoin costs lots of computing power, which results in hardware costs and electricity costs. Every day on average, 900 new Bitcoins are added to the circulation by the mining process. And every 4 years or so, the newly daily Bitcoin supply will cut in half. This is what they call the halvening in Bitcoin. And when Bitcoin was first introduced to the world in 2009, 12,000 new Bitcoins were added to the circulation every single day. Since that day, every 4 years or so, a halvening took place. So what does this halvening mean and why does it happen? Well, it's just a hard-coded rule in Bitcoin software. You can't change nor prevent it from happening. And you must understand that because of this halvening cycle, the reward of mining Bitcoin will be less and less every time. The only reason for miners to continue mining is when Bitcoin's price keeps going up and up, else the hardware and electricity costs will be higher than the income mining produces. And again, there's a limited supply of bitcoins, meaning someday in the future it's not possible any longer to generate new bitcoins. Some people also call Bitcoin the digital gold. But the challenge with Bitcoin and Bitcoin system is that it is relatively new and hard to say what happens in the future. All Bitcoin supporters obviously think it will increase in value. Still, Bitcoin doesn't have many years of historical data like gold or the US dollar has, for instance, making it harder to predict its future. For example, every month I am buying stocks of an index fund called Vanguard S&P 500. So looking at the historical data of the S&P 500, you can see it shows an 8% return per year on average. And because it has lots of historical data, the chance of repeating similar results in the future is higher, I believe. It's the sole reason for investing in the S&P 500, receiving those 8% gains year over year. So I'm buying Bitcoin mostly because of the store of value and Bitcoin's potential being worth a lot more in the future. I believe this is why most people buy Bitcoin. Therefore, I think the store of value characteristic is the most crucial part of Bitcoin's success nowadays. At first, Bitcoin was meant to use it as a transactional product. Still, as we discussed in a previous video, you can't really use Bitcoin as a medium of exchange because of its volatility. More and more people believe Bitcoin's strong suit is its store of value since it outperforms other assets such as stocks and gold if you look at the 5-year horizon. So whether Bitcoin can maintain its exponential growth like it showed the last 5 years, no one can tell for sure. Still, Bitcoin does checks off many characteristics of sound money. All in all, I give Bitcoin a 4 out of 5 star rating for the 7th characteristic of sound money, which is a store of value. I don't give it a 5 out of 5 star rating because it's still relatively new. It's not sure whether Bitcoin's adoption will continue to rise among other people besides the early adopters. So please let me know in the comments what you think of this. Do you think Bitcoin will continue to rise in value? And if you like this video, please give that thumbs up button a nice little jab. Also make sure to jab that subscribe button if you want to see more of me. Every week I publish 2 new videos and there are still a few characteristics of money to be discussed for Bitcoin. After that, we probably head over and start talking about marketing and business subjects again. If you'd like to know more about me and my story, please check out the videos in the description. So that's all I got to say for today. Stay hydrated, stay healthy, and good luck with your journey to earning that daily bread for you and your family. Robin out.